and get started then. So again, a good day, and thank you very much for attending the webinar on the SPY Super System software. My name is Dave. I have a trading room, which we basically trade options, variations of options, mostly puts and calls and some spreads. But I'll go into some of the specific strategies that we use in the room. We've been producing about an 85 to 90% win rate month after month. This is just starting my 4th year with the trading room. Finished up 3 years in December, started in January of 2022, which, by the way, was the very first month of the 16-month bear market we had. The last bear market we had started in January of 2022. That's when we started. And for the 16 months that we were trading in that bear market, we had 15 winning months, 1 losing month, very small losing month. So the specs, as I'll show you, the stats I'll show you as we go ahead are very, very favorable. I just take a quick minute just to, I get questions all the time about how I became a professional trader. I was a part-time trader, like most everybody is, for quite a few years, trying to learn strategies, learn options, getting beat up, losing my account, coming back again, trying again, continuing to try to learn. But how I switched over to becoming a full-time professional trader is an interesting story. And again, what happened is about 15 years ago, it was 15 years ago, this past December, I was working in IT. I had been working in IT for quite a few years, working with a cloud computing company here in Charleston, South Carolina, which is where I live. And in December, my boss, who I've been working for them for quite a while, and he was a good friend of mine, came to me and said that they had run into some rough financial times. Cash flow had dried up, and they were going to have to lay me off with a few other people. But I got laid off in December, so it was about 2 weeks before Christmas or so when that happened. So I kind of took advantage of that and decided I would go ahead and trade full time. I mean, I had all this time. I wasn't going to look for a job between Christmas and New Year, so I started to trade full time, and it went pretty good. December was okay. I mean, I've made money, but December is a very tough month usually. But when I get into January and I was focusing on highest probability trading setups and following my strategies, a good month in January, really, really good. About halfway through February, again, February was a good month. I was doing very, very well. And about mid-February of that year, my boss called me and said that he'd gotten his cash situation stabilized, and I could come on back and start working on Monday. And I told him I appreciated the offer. That I was very grateful for that, but the situation had changed, and basically I couldn't afford to come back and work for him anymore. And at this point, I was going to continue to trade full time. So that's how I got into it. It's interesting because most people, when they switch to, at least most of the people I know who are professional traders now, they basically laid out a plan of when they would switch over from part-time to full-time, and it usually is based on the criteria about meeting certain benchmarks month after month after month, 75% win rate or more, profit factor of 2 or 3 or 2.5 or something. That they set some guidelines, and they would have to do that for several months before they felt comfortable, because it's a big change when you switch from part-time to full-time. Obviously, if you've got income coming in, it's very helpful. When you don't and you're relying on your trading, it changes your mindset. So there was a lot of bumps in the road, but I've been doing this now full-time for 15 years, almost 16, and I love it. And I love trading. I love doing technical analysis. I love chart reading. So that's how I got here. I do this every day. People ask me, how can you possibly sit there in front of the screen every day and trade? And I love trading. I love trading, and that's why I did the room, because I thought I had a strategy here that could help a lot of traders. I know I could have used some help when I first got it started, so that's where I'm coming from. All right, so let's get started here. Again, my name is Dave, and I use a piece of software called the SPY Super System software, which I'll show you. It used to be called the Compass. We call it the SPY Super System now. I also have a live trading room that's open, market open to market close, 5 days a week. So I'm in there all day long with the members who are asking questions, posting questions on stocks that they like. I'll be posting charts all day long. And then I also have a text alert service where the highest probability trade setups that we take are sent out by text alert. Okay, first thing I have to do, of course, is get through the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right. If you have any questions along the way, just post them in the question box and I'll try to answer them. If you have questions I can't answer or don't get around to, if you would just put your name and phone number in the question box or the chat box, and Rory will give you a call back just to answer the questions for you. This is his number right here, 786-732-4656. I'll share this again at the end, but you can put those if you're just interested in further information on getting purchasing the software or whatever. You can just go ahead and put your name and or Skype name and your phone number in the box. All right. This just a graphic representation of what the software looks like. It's called the SPY Super System. Again, what it does is we track institutional money flow by looking at certain indicators over certain time frames, and I'll go over how that's done and show you how exactly we find these high probability trades. And this was what the alert service looks like. I send out alerts on high probability trades. We don't do an awful lot of alert trades. It's not like we send 4 or 5 out a day. You know, typically you might get somewhere in the neighborhood of 3 to 5 a week, depending on the market. It's all dependent on the market. I only send out alerts on trades when I feel that they're the very highest probability trades, and they'll come right to your phone. All right. Now, one thing I want to cover, and if you've listened to webinars, I do this every single time, and it's because it's extremely important. It's really important to understand what moves markets. All right, it's really critical. Our market is made up of tens of millions of retail traders like myself and everybody here. And we're the little marbles right here. And what it's important to understand is when retail traders are trading in the market by themselves, in other words, there's no big institutional money pushing anything in one direction, then we're just trading against other retail traders. And when we're trading against other retail traders, what you get as far as the market's concerned is you get a lot of chop and a lot of chaos. And you're basically just bleeding money when you're just trading in here if you don't have institutions in the trade. And that's what you need to find out. So this is the institutions. Now this is what moves the markets. And you've probably heard this, institutions do move the markets. They need to be pushing in the same direction generally. But what the institutions are made up of are investment banks, JP Morgan, Morgan Stanley, Bank of America, all these big investment banks with billions and billions and probably trillions of dollars to invest and trade. And they're gonna move the market when they're pushing in one direction. When they're in a trade, we want to know about it and we want to take advantage of that. Now, the institutions aren't just the investment banks. They're also made up of pension funds, huge pension funds, police, firemen, state pension funds. All of these have massive amounts of money. Hedge funds, just think of the number of hedge funds there are and how much trading they do. I mean, they do billions of dollars worth of volume on the market. And so they're in there pushing the market as well. And then the last one would be things like Vanguard and T. Rowe Price mutual funds. These mutual funds also invest and trade. So that's what makes up the category of institutions. And it's our job as a retail trader to try to follow them. We want to be in trades when they're in it. And one of the things that the investment banks have are called algos. You've probably heard about algos. Algos are computer programs that are written by these institutions to try to take advantage of the market. And these algos can be looking for specific criteria, setup criteria on the charts, candlesticks. They also they also read the news optically. If you've ever seen the market react, like the S&P, if you've ever seen it react to the jobs report when it comes out, or the FOMC, the Fed, when it comes out with their interest rate announcement, you'll notice that there's usually huge moves in the market within a millisecond of the report coming out. And obviously humans aren't doing that. Humans aren't in there pushing mice, clicking on mice to do that. That's the algos reading the news, identifying keywords, and then putting in trades based on that. So that's why you get all this volatility when the Fed comes out, when the jobs report comes out. And I'm sure if you've ever watched the markets when that happens, you see them fly all over the place. So these algos can do something else that's interesting, and that is they can identify retail traders, what some retail traders use for their strategies. MACD crossovers, trading RSI when it's shorting a stock when the RSI is too high. They know these things, and they can write programs to take advantage of that situation, and they can actually create like a MACD crossover and then reverse it to trap retail traders. So they can do that, and our job is to find out when they're coming in and moving a trade in the direction that we want to take, bullish or bearish. We just want to follow them. All right, so that's what moves the market. This is very important to understand because the market is a key. The market, it has to be the first thing that you use as the criteria for the trading you're going to be taking. That's very important to know it. All right, so we have a couple of rules to trade by in the room and on the alert service. One, we trade the best and skip the rest. It sounds really simple. The hard part is finding the best, but this skipping the rest is probably the biggest advantage that we get over other retail traders, because we don't get into trades that are less likely to be profitable than the ones we take. And I'll show you exactly how we do that. This limits the number of trades we're going to be taking, obviously. We're not going to be taking any mediocre trades or trades that just may look good, but we don't have institutions in them. The second thing I talk about, and I say this in the room most every day, our objective is not to make trades. Our objective is to make money. And why is this important? And this is important because one of the biggest problems that most retail traders have is over trading. They make too many trades. They get bored. They don't have the patience to stick with a particular strategy. If they're sitting in front of the machine at 9:30, they haven't made a trade at 10:30, they find something. I'm going to make a trade here. I'm a trader. I should be in the market. Completely wrong. You only want to make trades when they're the best, and sometimes there isn't any setups for that. Right? So again, objective is not to make trades. Our objective is to make money. And the two key elements, and this is really important. This is something that a lot of traders, when I talk to them or when I mentor them, they basically write down and just stick on their screen. You want to maintain discipline. Now, what maintain discipline means is if you've got a strategy that you know works, and all the strategies I have, I know work at least 85% of the time. If you have a strategy that knows works, that's what you want to stick with. Now, there may be several strategies that are all like that, and you may be using specific strategies under specific market conditions. But the point is not to wander away from those. Stay with those strategies that work. And the second thing is to remain patient. And this is something to tell you to not to overtrade. Please be patient and wait. Don't take trades just to take a trade. So that's really important. And these two things here, if you can do this, if you can find a strategy that works 85% of the time, stick with it and remain patient and wait for those, it's going to improve your trading dramatically. All right. As a profitable trader, retail traders, we need an edge over other retail traders. Remember, we're not going to be taking money from the institutions. We're going to be taking money from other retail traders. We're not going to beat the institutions. Our edge is the right line compass system, which is now called the SPY super system. But if the compass system is the software, we call it the SPY super system when we add in things such as the scanners, etc. So this tells us what the institutions are doing, and I'll show you. Another edge that we have is we trade stocks that have relative strength and relative weakness. So if I find 4 stocks that are being purchased by institutions, and I like 4 of them all long, I'm going to take the one that's outperforming the SPY by the most. All right. If the SPYs are going sideways and down, and we have a stock that's going up, stacking green candles, it has relative strength. Vice versa on relative weakness. That's going to increase your edge on the trade that you take, because if the market turns against you, the stock is not going to go against you as fast because you're trading something that's outperforming the market when you get in. We try to trade with the market trend if there is a trend. Some days there is no trend. Right now, the overall market trend on the daily chart is nothing but chop. It's been chopping around now for about 3 weeks, making swing trading very difficult. We've had a small number of swing trades. But we have a strategy we use called the SPY super system, which trades indexes intraday. That has been very, very successful, and I'll go over that. And then the last thing is to buy near support and sell near resistance. This is to kind of stop you from getting FOMO, fear of missing out. When a stock's ripping higher or ripping lower, don't grab it. Don't buy it. Wait for it to pull back or bounce up to support or resistance. Look for a return to the original trend and enter there. Okay? All right, so the compass system, the SPY super system, it identifies the highest probability setups while sidestepping setups that look good but are going to fail more often than they succeed. We do this by identifying when the institutions are in the trade. I keep saying this, and knowing when an institution in the trade is critical. This system does this by identifying when institutions are driving the move and when they're not. And it analyzes very complex data. There's a lot of data that's being analyzed with the software. And it displays the results, though, in easily identifiable visual format. It's basically colored. You're going to see the colored indicators. These things are going to give you a huge edge, and it's easy to identify. So that visual element makes it easy even for new traders to find high probability trade setups. Okay. So again, getting an edge over retail traders. Our edge here is we're only taking trades that are being driven by institutions. I keep saying this, institutions. We want to know what they're doing. Those are the trades we're taking. We want to trade stocks that have relative strength or relative weakness versus the SPYs or the Qs, right? Again, we talked about that. We want to trade in the direction of our overall market if there is one. And it has to give us an edge. Our trades are going to be supported by institutional buying and selling. We're basically riding their coattails. The stocks will be outperforming the index, the SPY or the Q, and they're going to be moving in the direction of the overall market. Big edge. If you're doing these things, you've got a big edge over other retail traders. Most retail traders don't have any idea whether institutions are driving a trade, and most retail traders don't even understand what relative strength and relative weakness is. They think it's RSI. They don't know what relative strength and relative weakness is, and those two things are really important. All right, so as we move ahead here, I'm going to just kind of go over what I call my basic high probability trade setup funnel. This is kind of this is a virtual funnel that I go through. It's basically a checklist I go through in my mind when I'm looking for stocks. And the first thing I do, and this is really important, as I look at the daily chart and I make sure if I'm going to go long, the daily chart has to be set up bullish. If I'm going to go short, it has to be set up bearish. I'm not going to trade against the daily chart. It takes away all your flexibility in the trade. If you're in a trade long and you've got a bearish daily chart and the stock turns against you and all of a sudden you're down money, you can't stay in it. I mean, you have no option to stay in it overnight if the daily chart is bearish. So that's really important. And then I look at the 5-minute chart, and I want to, when the 5-minute chart is lined up for bullish, and I have a daily chart that's bullish, then I'm in the trade. That would be the place where I look to get in the trade. I would try to find a setup on the 5-minute chart that allows me to get in. Again, we're going to trade with the trend, both the stock and the market trend, if we've got them. Then the compass indicators, the SPY super system indicators, these have got to be showing you institutions bullish if you're going to go long, bearish if you're going to go short. And I'll show you exactly how we see that. And then we look for relative strength and relative weakness. So if you got five stocks that meet these criteria here, and then you're going to try to take the one that has the best relative strength for a long, the best relative weakness for a short. And then look to enter near support or resistance. And what I do if I find a stock that I like, but it's too far away from support or resistance, I'll put an alert at support or resistance and identify it when it gets there, and then I can go back and take another look at it. All right, and again, this is just the funnel method. This is just written out so you can see here. Stock to be traded should have a daily and 5-minute chart aligned. This is really important. Look at your daily chart first before you take a trade. And the compass indicators, the SPY super system indicators, must align in the direction of the trade. The institution's got to be going long if you're going to go into a trade long. You don't want to trade against them. And again, it should have relative strength and relative weakness. One little thing here, I noticed that on a 5-minute chart, one of the things that's on a 5-minute chart, one of the indicators is called the VWAP, the volume weighted average price, something that all institutions use. When you're going to go long a stock, you don't want to get long until it's above the VWAP on the 5-minute chart. And if you're going to go short, you don't want to go short until it's below the VWAP on the 5-minute chart. Right, those give you some criteria for entering the trade. Okay, and again, have patience. Really important to have patience. These are in the room. These are the strategies that we use. All options. I mean, I do buy stock sometimes. I have a stock position in Root right now, ROOT. I like that one, but the options were just not tradable. They're too widespread, too expensive. So I took some shares, but that's not normally what happens. In the room, we take straight calls and straight puts. This is what will come out on the alert service as well. We do debit spreads using weekly options expiration. This is a little different than from what most people understand debit spreads. Most people do debit spreads and they'll go out 2 or 3 or 4 weeks. My experience and my Trader View, which is my software that I load my trades in every week, shows me that debit spreads using weekly options expiration have a better ROI, a considerably better ROI than going out to multiple weeks in the future. We do time spreads. This is done over earnings. This is the only earnings trade that I take. Time spreads, or sometimes called calendar spreads, and all of this is a non-directional trade that we take to capture volatility crush once the earnings come out. You probably know that the options prices are jacked up pretty high before earnings because the market makers don't know where the stock's going to go up or down, and they don't know how much it's going to go up or down. So they cover themselves by jacking up the premium in there, and that's called volatility. And when the earnings come out, and the market makers now know where the stock's going, which direction, and how far, then they take that extra premium out of there, and that's called volatility crush. And what we do is we're actually harvesting the average volatility crush with a time spread. And I have very specific criteria that I use to get into a time spread. They work pretty well. They're not 100%, but they're good. They're in the upper 80s, and they work very well. Then I have another strategy called the weekly ATM strategy. This is something we use on a neutral to bullish stock. It's very difficult to do right now for the last month or so because the market's too choppy. There is no anything that's not chopping around too much. We don't want choppy stocks for this. But it's neutral to bullish. And this is, we sell puts on a stock week after week after week while holding a longer term put further out in time to protect ourselves and to cut down on the margins required. And I have videos on all of these strategies. And then we do credit spreads to capture premium. If you're probably familiar with credit spreads, basically if you're going to do a put credit spread, you're expecting the stock to stay above a certain strike price for the period of time until expiration comes. And what you're doing is selling puts you're selling the put credit spread, and you're capturing premium so when you do these, your account gets money put into it as soon as you take the trade, and then you try to buy it back for a lot cheaper further down the road as it gets closer to expiration. And then I have one specific system here that's called the SPY Super System. These are for very high probability trades to catch the SPY moves in the SPY, the Qs, or the IWM. All right, and you can do it in the Dow Jones as well. And this also works for futures. You can do it on the NQ or the ES if you're into that. But this is a very high probability trade setups. We do them on a 5-minute chart. They're very quick trades. We take them in the room. I can't alert on them, and I can't post them in the room. All I can do is let you know when the setup comes and show you what those setups look like. And I will go over this exact setup here today by using the SPY Super System software. All right, and to go over the alert service briefly, it's designed for day trades and short-term swing trades. All right, this is not an investment service. This is the trades we take. Are you going to be in and out the same day, or you're going to be out within usually overnight, out to perhaps 3 weeks. It just depends on the individual trade. But day trades and short-term swing trades. One of the things to note here is if you're a trader who is under what's called PDT, or pattern day trading rules, which means if you can only take 3 intraday trades, or buy and sell the stock the same day or the option the same day 3 times in a 5-day period. The nice thing about this is if you've got some trades and you can't take them off that day, you can't close them because you'd be breaking your PDT rules. Since all my trades I take are lined up against the daily chart, if you want to hold them overnight, it's safe to do that. In fact, a lot of times you'll even make more money by holding them overnight. So it takes away some of that problem that you would have not being able to take a trade because you can't close it out that day. Because they're set up bullishly or bearishly on the daily chart, you can hold them overnight. Even if I close them out, you can still hold them. It's designed for traders who can't watch the market all day or don't want to. You're going to get real-time alerts on the highest probability trade setups, as I said. And the highest probability trades we identify these by identifying institutional involvement. This is the critical thing. Any trade you take is going to have institutions in it when you take the trade. I do look at market internals, which is I look at the cumulative volume index of the stocks going up versus the stocks going down, and determine if the market is bullish, bearish, or neutral. And then I do some fairly deep technical analysis on each one of these individual stocks to make a determination of if it's a strong, high probability setup with the technical analysis on it. All right, this is just an equity curve. This is for the alert service. It's a little bit old at this point. We got to put together a new one, but this is what you're going to see. This is assuming $2,000 invested in each trade from March 23 to June 24. We'll put out a new one later, but it's going to look exactly the same, basically within a couple $1,000 of each other. And it's obviously bottom left, upper right. So very, very good. And I'll show you the specific results that we've had. All right, let me just take a sip of water before I'm going to cover some options here. A lot of people always are asking, can we talk about options a little bit? So I'm going to spend a little time on this. All right. So this is going to be fairly basic, although I'm going to go into a few things that is a little beyond basic. This is called an option chain. Anytime you look at one of your platforms, this is what the option chain is going to look like. They all have the same information. They're all going to have the same pricing. Everything's the same, but it's important to know what you're looking for here. Across the top here, these are expiration dates. Sometimes you'll have them down the side, but this is expiration dates. This stock is Bristol Myers. This is an old back from March, but this is a Bristol Myers, and it was trading at the time at 53.79. You can see right there, right? So this is the option change. These are the expiration dates. You notice that Bristol Myers has expiration dates every week. These have weekly expirations. A lot of stocks have weekly expirations. Some stocks only have monthly expirations. The indexes like the SPY, the Qs, the IWM, they have daily expirations. They expire every day. And those are called, if you trade an option today that expires today, those are called 0 DTE, 0 days to expiration. Right, so these are expiration dates. Down the middle here, this is your strike prices. And if you look at the little blue shaded line here, it was trading at 53.79. You're at the money. This is considered at the money. It was $54 strike. All right. So this is at the money strike. These are calls. These are puts. Calls are on the left. Puts are on the right. If you're looking at this option chain and you're looking at this, this is at the money. These are in the money because the stock has already gone above that price for the call side. These are in the money. All right. So and it'd be the exact opposite on the put side. One of the things to note here is this is the bid price right here and the ask price. This is the bid and the ask. So if someone's trying to buy this, they're going to want to get in cheap. So this would be what would being bid for it. And if you're going to sell it, you're going to sell it more expensive. So this would be the ask price. So this usually you're going to get filled between the bid and the ask, somewhere in the middle of here. Okay. The other thing I have on here to look at is the delta. The delta is right here. This has a delta of 52. We'll go over this in a little bit more detail, but what the delta tells you is if stock price, if Bristol Myers moves up $1, how much is my option going to move? If you're at this strike price right here, your option will move 52 cents. So Bristol Myers goes up $1, your option goes up 52 cents. Notice as you get further into the money, the delta is higher. So the further in the money options will move up faster than the lower deltas, which of course you pay more for them. So it's a little bit of a trade-off. Right, and I'll tell you exactly what I recommend and what you should use for deltas on the option trades that you take. All right, so there's your expiration date, strike prices, and your delta and bid and ask spread right here. Now over here, I've got one other thing on the same option chain. I've got OI vol. This is an open interest in volume. This tells you two things. It tells you in this particular case, if you look at the $50 call expiring on March 15th, it has 617 contracts that have gone through there today. So 617 call options have either been bought or sold at that strike price, and the $50 strike price on Bristol Myers today. This is the open interest, 11,867. This is how many contracts were still outstanding when the market opened that day. This is how many options contracts were out there when the markets opened. Now, this only changes at the beginning of the day. This is not updated. This 617 is not included in this 11,867. And the reason you use this is because if you've got a lot of volume and a lot of open interest, it makes it much easier to get in and out of a trade. Your bid-ask spread is going to be much tighter. If this was like 10 contracts and this was like 50 open interest, the spreads are going to be much wider. It's going to be much more difficult to get in and out of the trade. All right. All right. So what we're going to talk about here is what are options? Well, options are a derivative. I think everybody knows that. You're basically buying a put or buying a call. And we're going to talk about what makes up the premiums. What makes up why are you paying this much for the option premium? Intrinsic versus extrinsic value. This is very important to understand. We're going to talk a little bit about the Greeks. I'm not going to go into huge detail on the Greeks. Strike price and expiration date we just covered. Volume and open interest we just covered. And I'll talk about some primary option trades that we use. And I'm also going to lay out for options, I'm going to have 4 different strategies, 4 different types of strategies. If you're bullish on a stock, I'll show you the different option strategies that you can select from. Bearish on a stock, I'll show you the bearish strategies you can use. If you're neutral, there are trades for, if you're neutral on a stock, you think it's going to move sideways, there's neutral option strategies. And then we're going to talk about some of the setups for these. All right. So what are options? Well, options are derivatives of stocks. Basically, when you buy a call or you buy a put, you're giving yourself the ability or the right to buy that stock or sell that stock at a specific strike price by a certain date. All right, it's so that it's based on the stock's price, right? And you can buy them or you can sell them. So every option strategy is made up of buying or selling calls and puts. That's all there is to it, no matter how complicated it seems. So when you buy, you either long a call or long a put. That's the terminology. If you say I'm long a Microsoft's call, then you have bought a call. If I'm long a Microsoft put, then you bought a put. Selling exactly the opposite. You are short a call or short a put. All right, and we're going to talk about this a little bit. Buying a call, long a call is bullish. If you're buying a call, you're expecting the stock to go up. If you're selling a call, which you should never do, you're expecting the stock to go down. All right, and buying a put is bearish. You're expecting the stock to go down, and selling a put is bullish. You're expecting the stock to go up. All right, so these are basically what you can do. You buy them and sell them. So what makes up an option premium price? And this is very interesting. Okay, options can be at the money, as we mentioned. If Bristol Myers is trading at 59, let's take Microsoft. Microsoft's trading at 100, and at the money would be 100. If you buy a $100 call or a $100 put, you're buying an at the money put or an at the money call. If you buy an in the money call, it would be exactly what it means, in the money. So if Microsoft's trading at 100, any strike below 100 is in the money. Any strike above 100 is out of the money for the calls. For the put side, exactly the opposite. Right? So that's what in the money is. Out of the money is again a $105 call for a Microsoft put is trading at 100. $105 call would be out of the money. The stock price has not got there yet. It's got to move up $5 just to get to the money. All right. Now, so that is part of your stock. That's part of your premium that you pay for the options. So if for example, let's just use Microsoft again, trading at 100. Let's say we buy a $95 call. Well, you've got $5 of intrinsic value. In other words, the stock's at 100. You're buying a $95 call. It's obviously you could obviously buy the stock for 95 and sell it for 100. So you've got an intrinsic value built into that option of $5. And you typically always want to have some intrinsic value in your option, which means you want to be buying in the money options. Now, the market makers add to that implied volatility. How much do they expect the stock to move? How volatile is it? How much does it go up and down each day? And what they do is they add some additional premium into the option price for that. And then there's time decay. It's the last one. And this is how much time is there between the time you buy the option and the time that it's going to expire. So if you're out 2 or 3 weeks, if you're out 3 weeks, you've got 3 weeks worth of time decay. that's built into the option price. So to show you what a price would be, if you've got $100 Microsoft trading at 100, and you buy a $95 call, you've got $5 of intrinsic value. So the option is going to cost at least $5, but it's also worth $5. Then they're going to add implied volatility. So maybe instead of paying $5 for the option, you're going to pay $6 based on implied volatility. And then they're going to add money in for time decay. And let's say they put in another dollar for time decay. So you've got $5 for the stock price, $1 for implied volatility, and $1 for time decay. So you may pay $7 for a $95 call for Microsoft, depending upon when it's going to expire. The further out in time you go, the more it's going to cost. So that's what creates the option price that you're going to be paying for your option. And again, intrinsic value, we just covered this. If you have a $50 option on a stock trading at 55, you have an intrinsic value of $5. If you're paying $7 for that option and you got an intrinsic of 5, the extrinsic value is the other $2. So the extrinsic value would be $2 if you were paying $7 for a stock that has an intrinsic value of $5. And this is important because the time decay and the volatility difference as well is going to be heavily impact the extra $2 that you paid. Okay, because you're paying for time. If the option expires in 3 weeks, they're charging you for how much time there is for that stock to get to that strike price. So you're paying for time. So as time goes by, as you get closer and closer to expiration, and the stock hasn't reached it yet, the premium that was added to your option price, that extra $2 is going to keep going down. So if you have a stock that's a $50 option on a $55 stock, and when you buy it and you pay $7 for it, if the stock doesn't move within a few days, that $7 is going to drop down to $6.25, $6.50, $6.10. It's going to keep dropping because the stock price has not moved up, and the extrinsic value is being decayed through time decay. All right. It sounds a little confusing sometimes, but it's important to understand this. The Greeks will just kind of run through quickly. Again, the delta we talked about, how much the option price moves in relation to the stock price. Stock moves $1. Delta of 50 means the option will move 50 cents. If you have a delta of 70, the option will move 70 cents. And that's what the delta tells you. Theta, which is the time decay, that's the decrease in the value of the option price as expiration date approaches. Theta is not linear. Time decay does not occur on just a sloping line like this where it just comes down. And time decay is slower early in the trade, and then as you get closer and closer to expiration, it accelerates. So there's a lot more time decay coming out of the last week than there is the first week if you're in like a 3 or 4 week option. And then there's gamma. Gamma is the rate of change in delta. This means as the stock price goes up or goes down, how much is the delta going to move? It's going to move based on the gamma. So if the stock is trading at 50, all right, the stock's trading at 50 and the stock moves up to 52, all right, and you have a delta of 50, then your option is going to go up again by 50 cents for each one of those. So it's going to go up $1. But if the stock price is moving up more quickly than it is expected, or it has a high gamma, in other words, if it has a high gamma, that's going to make the change in delta go faster. So if you have a delta of 50 and the stock moves up $2, that delta could go to 52, or it could go to 56 or 57. It depends on the gamma. The gamma is what moves the delta either up or down, depending on what the stock is doing. And so stocks that are really, really volatile, that move up and down a lot, they have a high gamma, which means the delta is going to go up really, really fast if the stock moves up, but it's also going to come down really, really fast if the stock comes down. So gamma is basically a kind of a volatility measure on the delta. All right, so the primary option strategies that I use, most everybody uses, we do either long calls or puts. This is the most common one. Buying calls, buying puts. We do put credit spreads or call credit spreads. This is to bring in premium. We do put debit spreads or call debit spreads. Again, this is a debit to your account. We do calendar spreads or time spreads, which is I mentioned before. It's one of the calendar spreads we use as a time spread. There's condors, which I don't use. There's butterflies, which I use occasionally, but I don't talk about it a lot in the room. And then there's strangles and straddles, which I do use. And strangles and straddles and condors basically are non-directional trades. With straddles and strangles, you don't really care which direction the stock goes. You only care that it moves a lot. That's what you're looking for. You're looking for a neutral strategy with a stock that moves a lot. So just as an example, a strangle on Microsoft, if you had a Microsoft trading at 100, a strangle on Microsoft would be $101 call and a $99 put. You're buying a one strike price above the current price of the stock and one strike price below. So you want this thing to move as much as possible, but you don't care which direction. So that's what a strangle is. Straddle's the same thing basically. It's just using at the money. All right. So this is the bearish and neutral option strategies that are available to us. If we like a stock long, this is what we can do. We can buy calls, we can sell puts, we can do a put credit spread, or we can do a call debit spread. If we're bearish, we can go long puts, in other words, buy puts. We can sell calls, and I have this in red because you should never sell what's called naked calls. Should never be selling calls without it being in a spread, never. It's basically blows up, it can blow up your account. It's very, very dangerous, and I would not suggest it ever. And then we do call credit spreads and put debit spreads. So this would be the bearish options. If you like a stock short, this is what you'd look at doing. And then there's the neutral option strategies. Neutral would be condors, which you're looking for stock to stay within a range. Straddles and strangles, which you're looking for a big move either way. You don't really care which way. And time spreads, which we're just looking for specific criteria to capture the volatility crush once the earnings come out. Okay. And I'm going to kind of skip through this because I don't want to make this too long. These are the specifics of how you do these particular strategies. I do have videos on all of these strategies that we use in the room, how to structure them, what's the best trade to take under certain conditions, all of those things. Right? So the strike price, what you want to do is you want to use an in the money strike price. So if Microsoft's trading at 100, you want to buy a strike price, you want to purchase an option that's below 100. That's in the money. So use an in the money strike price. Go at least 2 to 3 weeks. Even if you're going to do a day trade, make sure you go out at least 2 to 3 weeks on the expiration date so that you're cutting down on the amount of time decay that you're going to suffer if the stock moves sideways or moves against you. So look for a delta of about 65 to 75. Okay, that's what I look for. All right, so I'm going to talk about the SPY super system and the option room trades results. This is kind of what we've produced over time here, and I'm going to just kind of break that down. In 2023, the trade results, if this is using, if you use $2,000 per trade and you took the trades we took in the room, it produced a profit of about 60,000, a little over 60,000 in that month. So if you had a $50,000 trade account, you'd be using 4% of the account. And when you started at the end of the year, you'd only be putting 2% into the trade. Just kind of depends on yourself. But this is all based on 2,000, just to kind of show you. In 2024, very similar, same criteria. Put 2,000 into each trade. It produced a profit of about 55,000, just a little bit less in 2024 than 2023, and most of that is determined on what kind of market we're trading. All right, so these are some specific trades. Now, this is for January of 2024. These are the trades that we took. I don't list every single one, but what I want to show here is specifically what kind of percentage gains you can expect on the trades that you take. A lot of people will tell you, you look at webinars where they tell you can make 400, 500, 600, 700% consistently on trades. You can't, you never will. You can make some here and there, but you're going to take way more losses than wins on those. So you can see what our win rates are. They typically anywhere from 10 or 15% up to 40 or 50%. That's most of them are going to be in there. We did have 96% here and 65%. So we'll get some of those as well. But anyway, January, 20 wins, 2 losses, 90% win rate, produced 75.05. Putting 2,000 into each trade. February, again, you can see the percentages stay about the same. We had 24 wins, 2 losses. That was a 92% win rate. This was our best month of 2024. 92% win rate produced 11,745 in profit. I broke out the alerted trades also for February. 20 wins and 2 losses, 6,930 in profit. We have more trades in the room than we do in the alert service, basically because I can't post every single. I can't alert on every trade, especially if I think I'm only going to be in it for half an hour, 45 minutes, and I can't also if it's or I don't post them if it's after like 3:30 because it doesn't give the alert service members time enough to get into the trade. Question here. Well, you're from Australia and trying to open an options trading account. All brokers are asking you to pass a test on option trading. Is that common? What they're asking you for, typically, I've never seen a test. They typically ask you how much experience you've got in it. The ones in the U.S., they just want to, they're covering themselves when they do this. That's all. What they're doing is they're trying to protect themselves against taking advantage of traders. So they'll say, how many years of options experience do you have? You know, so you can get, because they only give you an option account at certain levels if they feel like you're not going to get blown out of the water with the thing. I've never seen a test in the U.S., but they do ask questions about what your experience levels are. But it's pretty common for traders who want to get options just go in and say, yeah, I know how to trade options. I've been trading them for 4 or 5 years. They're not going to follow up on it. All right, so this is February here. Good month in February, really good month of February. I switched over. I mean, I'm just kind of cherry picking here. I'm not going through every month, but I just want to show you that the percentage gains stay about the same. The percentages win rate stays about the same. Option room, we had 81% win rate. It's pretty low, actually. 29.7, 57.36 in May, 49.79 in the alert services. All right, June trades, again, 86% win rate. 92% win rate in the alerted room. We had 14-1. Not a lot of trades, you can see that. 15 trades, but 92% win rate. The alerts actually made more money than the room that particular month, putting 2,000 in each trade. July, 22 wins and 4 losses, 85% win rate. Alerted trades, 12-4, 75% win rate. Still produced 3,300. So you can see what to expect. This is you're going to see this month after month after month. It's the same typical results we get here. 17-2 in August, 89% win rate. 8-1, 89% win rate on the alert service. And profits, 4,500, 2,400. Not big profits, but decent profits. All right, now on the alert service, this is what you're going to get if you become an alert service member. You're going to get an alert. It's going to come with obviously the stock symbol. It's going to come with the option strike price. It's going to come with the expiration date to take, and then it's going to come with a price to pay for the option. And that could be a range. It could say, $1 to $1.05 or something like that. Now there'll be an alert to get you into the trade, and then you'll get another alert either that day or sometime in the near future of what to set for a price as a profit target. In other words, you'll put a trade in with what your profit target is going to be, your sell price. And so there'll at least be 2 alerts for each trade, but there could be a lot. There could be more. If we get in for like $2 and I set a sell order for $2.60, and then I wake up in the morning and the market's gapped up a bunch, I may come back and put another alert in and say, okay, change the $2.60 to $3, something like that. So you get at least 2 alerts, sometimes more. And when you get the alert to exit the trade, you should always remember to put it in as good till canceled. You want that stock to be good till canceled, so that if the market opens with a big gap, you'll be able to take advantage of it, even if you're not sitting there and watching it. And again, how do we achieve these stunning results? It's really important to understand how we identify when the institutions are in the trades. Okay, so we are able to identify when the institutions are driving a trade and when the market internals are heavily bullish or bearish. And these two go together. Now, if the market internals are neutral and I've got institutions in a trade, I'll still take the trade, as long as the market internals aren't against me. All right, so we only take trades when both of these, as I just said, that's not completely true. We certainly take all of our trades are going to have the institutions in the trade. That's how we find the best and skip the rest. Now, how do we do this? The Compass system, or the SPY super system, looks at how this trend is being created. Is our institutions doing this or not? And we do what's called a triple screen assessment. This is looking across multiple time frames. Look at momentum, trend, and money flow. This is the most critical one for me right here. Momentum. I focus very, very heavily on momentum, and then trend, and then money flow last. But this is the most important one, and I'll show you how it's shown. This is what the SPY Super System or the Compass system looks like on Thinkorswim. The Compass system is loaded on Thinkorswim. It also can be loaded on Ninja. You don't have to trade on Thinkorswim. I do not trade on Thinkorswim. I trade on Tradier, but the software itself will load up the correct all of the software on Thinkorswim, and that's where it'll calculate all of the indicators that we use here. Now this is just a 5-minute chart on Tesla. Doesn't matter when it was. It's just to show you the indicators. The most important indicators. This is the multi-time frame trend right here. Right? Now, green and blue are bullish, and red and yellow are bearish, as you'll see here in just a minute. This is the multi-time frame momentum right here. Multi-time frame momentum. Current time frame momentum. This is extremely critical for the intraday, quick intraday trades we take. And this is a derivation of money flow, which I've removed from the newest one. I'll show you what that looks like. But I've taken this out. I'm not going to use it. I don't use it very much, and I'm going to take it off here and put something more useful in there. All right, so that is the Compass system or the SPY Super system. This was on Tesla. A couple things on here. We had this little green line right here. That's the 15 EMA of an EMA. It's a smooth EMA. The little pink arrows here are what we call pop symbols, or pop out of the box symbols. These tell you when a stock is breaking compression. So it's breaking compression. Gives you an indication that that's what's happening. Right, and this 15 is very critical for us on the 5-minute chart. This is the dynamic compression zone that's also created by the Compass system or the SPY Super system to tell you when a stock is coming out of a dynamic compression area. All right, now I'm going to do this in two sections. I'm going to cover the first thing I'm going to cover. This is the SPY Super system. This is doing intraday trading on the SPY, the Qs, and the IWM. All right, now just kind of a little bit of information on this. I didn't introduce this until July. I was using it, but I didn't introduce it because it's so quick. But a lot of people, when they come into the room, they can only come in for a couple hours in the morning, a couple hours in the afternoon, and they may not have any swing trades or even intraday trades to take. So this is a good way to take trades during the day while you're waiting for us to find some high probability trade setups. So this is the intraday trading on the Qs, the IWM, and the SPY. And these are the results that we've had, and these really are pretty amazing. Now there's a lot of trades, but they're very quick. And as I say down here, with the SPY Super system, you're only going to have one trade on at a time, and it's going to be a very short duration trade. But they're very specific criteria that they've got to be set up to take them. So in July we started. We did last half of July, 2,000 invested in each trade, produced 25.96. August we had a lot of trades. 56 wins, 6 losses, and 2 scratches. So 2,000 invested in each trade produced 82.01. Again, you have to be able to do day trades to do this, because these are pretty quick trades. Some days you might have 2 or 3, some days 5 or 6, some days 1. It just depends on how many setups there are. But $8,200 in August. September, 2,000 in each trade produced 71.32. 40 wins, 3 losses, 2 scratches. October, 33 and 4, fewer trades. 2,000 invested in each trade produced 48.31. Right, pretty good. And again, you only have one trade on at a time. They're going to be very quick. Typically, they're going to last anywhere from maybe 7 or 8 minutes to maybe an hour. They're going to be very, very quick. And I'll show you exactly how we set up for these. In November, we had 54 and 5. 2,000 invested in each trade produced 93.70. The profits have been getting bigger. We're getting much better at trading these things. And these are my results, because I can't post or alert, but I do talk about them in the room. And when I see a setup that I'm taking, I tell traders that this is a setup for SPY Super system. I'm getting in here with calls, or I'm getting in with puts on the SPYs or the Qs, whatever. But it's something that you have to learn. It's important to learn, because you've got to manage these trades yourself. Things are happening very, very quickly. You've got to be able to manage these trades. You've got to identify how to be able to get into them and get good at doing that. December 69 and 15, a lot of trades. And December was a terrible month for trading swing trades. It was just horrible. But again, 2,000 invested in each trade produced $10,450 for me. For me. I've got people in the room that did better. I've got people that did worse. But once you learn the strategy, and it's not very complicated, and follow it meticulously, again, discipline to stick to it. Okay, so just to kind of go back to the room and the months now that I'm going to show both the SPY Super System results and the room results. This was the room for October. Again, you can see the percentages exactly what we talked about. 17 and 3, 85% win rate, 74.48. October alerts, 14 and 3, 82% win rate, 66,063. Now, October SPY Super System results were right here. This was October. We just mentioned this, right? 33 wins, 4 losses, 89% win rate, 2,000 invested, produced 48.31. Now, this is not in the room totals and the SPY Super System totals. These are not included together. These are separate results. So the options room had 17 and 3, 85% win rate, 74.48. This 74.48 is not inclusive of this. This is a separate strategy, and I track these separately, right? So 48.31, 74.48. If you did them both, you're in pretty good shape for 11,000 or something. Here's November, 14 and 2. Didn't have a lot of trades in November. 88% win rate, 59.58. Alerts, 14 and 1, 93% win rate, 78.03. See how the room actually, the alerts outperformed the room this particular month. Right, so here's the November SPY Super System compared to the room results. The SPY Super System trade results, 54 wins, 5 losses, as I said, 91% win rate, 2,000 in each trade, produced 93.70. In the room in November, 14 and 2, 88% win rate, 73.93. Really good results. Again, these are the results for me. This is the room. These trades here are all posted and alerted on. These are all posted in the room and send out on alerts. So these are ones that there's no wiggle room. These are specifically what was done. These are ones I took and I said in the room I was taking them, and I told them when I get in, I told them when I get out. But these have to be managed individually. Really important. And here's the December results here. SPY Super System 69.15, again 82% win rate, 10,450. In the room 14 and 3, 45.97. See, so not, way low number of trades. It was not a great month, but still $4,500 is pretty good. All right, and this is just October through December. This is the last quarter of 2024 using the option room and the SPY Super System results. Again, these are separate. But obviously, you can, if you're trading the Super System and you're taking the swing trades, you get them both. So October to December, 156 wins, 24 losses in the SPY Super System, 87% win rate. And this is very consistent. 2,000 invested in each trade, created a profit of 24,651. In the room, 44 and 7, 86% win rate. 2,000 invested, produced a profit of 17,774. So there's your option room and SPY Super System combined, 42,425. Really nice quarter, really nice quarter. The SPY Super System has really helped a lot when the market is not very amenable to swing trading. Okay, so this is, I'm going to show you the charts here now, and I'm going to show you the SPY Super System or the Compass System. First, I'm going to show it to you on the SPY Super System. This is the methodology we use for the SPY Super System. All right, so again, here's a 5-minute chart on the SPY. All right, so this is a SPY Super System trade we took in August. I have this out here because I've got everything marked off, so I don't have to do this each time. But it looks busy, but the only thing we're looking for here is this indicator right here. The current time frame momentum. This is what we want. Red to blue is selling to buy. Red and yellow is bearish. Blue and green is bullish. It goes from red to blue. We've got institutions selling, institutions buying. I don't care about the rest of these on the 5-minute chart for the SPY Super System. Then I'm looking at the VWAP right here, the volume weighted average price. This is one of the support resistance levels we use. And this is the 15 EMA of an EMA. This is another one of the support resistance levels we use. You can see where we get in right here. As it went red to blue, I get in right here as the stock broke above the 15 in the VWAP. Okay, that's my entry. I take it right here and I ride this thing up, and you can see we're getting these pop symbols. And I ride it up, and then I start to lose momentum right here, and I exit right here. Really simple. I'm just looking for the color change to make sure this is bullish. I'm looking to break above the 15 of the VWAP. I don't want to chase. I'm not going to take it up here. I'm only going to take it down here. So I take it right here and I ride it up, and I get out for $220 profit per contract on this. All right. So again, current time frame momentum, 15 EMA and the VWAP. That's all you need. This is a new template. Now, if you buy the software now, I've got that template. You'll see this template here, and then you also get this template. You can swap them back and forth. But this is a template for just trading the SPY super system only. All right, and what you've got here is, you see, we've just got the current time frame momentum. That's all we've got. The other ones are not there. And then we have the actual oscillator, which has the divergence stripped out. This is just the oscillator that tells us whether we have momentum or not. And you can kind of see if it's up and down and how fast it's going up and down, which gives you a little bit of an indication of how big a move or how fast a move you're going to have to be. So this is a new template for the SPY super system methodology for those trades only. If you're just taking those trades, you can use this. You can flip them back and forth, of course, in the Thinkorswim platform to have this one or to have this one. But that's a nice little addition, and a lot of people who just want to trade SPY super systems, this they like, because there's no clutter on the chart. All right, so here I'm going to show you a few more trades that we use for the SPY super system. Then I'm going to show you some of the regular trades we took with the swing trades, and I'll show you the criteria we're looking for. So here's the SPY super system. All right, here's what we're looking at. Current time frame. Hold on just one sec. Had a little delivery man come through. All right, so this is, and I'm just going to run through some charts here that show the SPY super system setups, and so you'll be able to identify them. But here is your compass system, your SPY super system here. Hold on just a second. Sorry about that. The delivery guy came to the door. My dog went crazy. Sorry about that. All right, so this is another setup here on the SPY super system. Again, this is what we're looking at. Current time frame momentum. It's green. That means the institutions are buying. See, they were selling over here. They're buying here. This is what I'm looking for. I'm looking for a move back to this VWAP right here. I'm sorry, the 15 EMA. VWAP is way down here. So the 15 EMA now becomes a criteria to take for a breakout. So we take it right here, and we run this thing up, and we run it up and run it up. Now, the stop would be if it fell below the 15, which it did not. So we stay in this, it comes down real close. And, you know, some people could have taken profits right here when you started to get red, but I stayed into it till right here, and I exited right here on these dojis that were happening. And you see it went from green to yellow here as well, but it was bullish the whole way through. All right, so here's one on the IWM. We enter right here, see the breaking through the 15. See, we went from yellow selling to blue buying right here. Current time frame momentum. Buy it here, doesn't do much, moves sideways, but where's our stop? Right here on the 15. So we stay in the trade, stay in the trade, stay in the trade, stay in the trade, stay in the trade. But because it's green, it's still institutions are buying this thing. So we stay in it, it doesn't fall below the 15, and out we go right here as it moves up here and then starts to weaken a little bit. And you can see it went back to yellow, we get out before that. All right, so there's your setup one there. There's another one right here. This was a short. All right, this was a short. As the stock breaks down through the VWAP in the 15 right here with a pop out of the box symbol, this is where we get in. Perfect entry. This is a perfect entry for shorting the IWM right here. Again, right here, and again, now the VWAP becomes our stop, but it doesn't go above the VWAP. Then as we move away, move down further, the 15 becomes our stop because this 15 is now below the VWAP. We follow this down and get out right here as it flattens out for $220 a contract profit on the IWM. And this one is 823. This was another one that you can see here. Again, what are we looking at? We're looking for a break below the 15, which we take it right here. Right? See, this is red. Institutions selling. Take it here. Moving down. It breaks through. We take it here and we ride it down. This white line is a pivot point that the SPY super system puts on. I watch this to see if it bounces off of that. It does not. I take it down again. It flushes nicely, and I get out right here. $280 a contract. This was really a good trade. Most of the SPY super system trades are roughly going to run usually between $60 a contract up to maybe 120, 130. Some of them will, if you can stay in them longer, if you got a trending market, it'll be a lot better. Okay. This was another one on 823. Is the VWAP. Red to blue. Okay, buying here. What we're doing is waiting for the pop. Pops right here. We take it here and we ride this thing up. And again, stays above the 15. And then we get out right here, $150 a contract profit. All right, so that's just, and I didn't put any indicators on here just so you can eyeball this yourself and see where you would get in. Notice it's red and now it's blue. Okay, they're buying, but do we buy here? We do not. We're waiting for a pop above the VWAP. Right here is where we would get in. As it breaks above the VWAP, we'd be in it for 5 candles and we'd be out right here. Very quick trade. IWM, the same thing. Where would you get in here? Are you looking for off the 15 here? So you're not going to get in over in here. You're going to wait to come down to the 15. See how it gets to the 15, and this is where you would get in right here as it pops up above the 15. It's all green. You're in and you ride it up. All right. And one more in the SPY. All right. So I think you're just trying to so you get the idea of what these setups look like with the VWAP here and the 15 here in the current time frame momentum. That's all you need for these SPY super system trades. I trade these things all the time. I did about 9 the last 2 days, and really successful in these things, especially when you're having a crappy market and you can't do anything else. Breaking down below the VWAP right there, there's your entry. Right there's a break below the VWAP, and you're out right there. It starts to pop back up again. Remember, that'd be a very small trade. Now, in this one, you could take it short, and then you could take it long again. You notice how it comes back up above the VWAP? See, it goes selling, which is red, to buying blue right there. You take it right there, and then you ride this thing up. And it gets to the pivot point and then starts to fade. You take your profits right there. So you took it short, and then you took it long. All right, I'm going to skip through the rest of these and get to some of the race charts of some of the swing type trades. Richard, what length of option are you using? Oh, on the SPY super system here, there's a difference now. The SPY super system, these are intraday trades on the SPYs, the Qs, and IWM. And the structure I use is I buy before lunchtime, before about 12:30, I use 0 DTE. I take today's expiration. For anything after lunch, around 1:30, 1 o'clock, 1:30, I'm going to switch to the next day's expiration date on the SPY, the Qs, and the IWM because I want to mitigate any time decay that I could get if the stock moves sideways. But I'm not going to hold it overnight. I'm going to take it off. I just don't want to suffer too much time decay based on that. Now, for my normal trades, I'm typically going out 3 weeks to 5 weeks on the expiration date. Usually, it depends on when earnings is going to be up, but I usually go up 3 weeks to 5 weeks on the straight calls, straight puts. All right, so this was a trade we did in Palantir. This is a daily chart. This again, remember I said the daily chart's what we look at first. Now on the daily chart, I'm using all of these three. I'm using these three, but the main two that I'm using is this right here: multi-time frame momentum, current time frame momentum. And I'm looking for these to be green or blue for long, red or yellow for bearish, and I want them lined up. See right here, you had yellow and green. I don't want to go long, but now I get green and green right here, and I didn't take it back here because it was such a long compression. I'm looking for a compression break. I get it right here on the daily chart. The VWAP's here, which I do not use on the daily chart, by the way. The VWAP should only be used on the 5 or the 15. It's a much lower time frame. All right, so I get in here and I get out right here at 31% profit in 2 days, right there on Palantir. This is Twilio. This was another good one. This was one we did with a debit spread. Got in right here. Now this was I kind of front run this a little bit. Current time frame was green. Multi time frame was red. the oscillator, which I don't have on here, was starting to slope up. So I grabbed it here and took this. It took 58% in 2 days. All right, this was another decent trade right here, CRM. These are daily charts. See this breakout? You can see this, the compression and the breakout right here. You can see that it's basically going green here. It's been green, goes back to yellow, but I take it anyway, and then it switches right back to green, and I'm okay with it. I took this for the technical setup as long as I had the current time frame green. All right, this was a debit spread on Lulu short. Here's Lulu's earnings right here. You can see. Didn't take it here. I watched it compress. Once it compressed here, you see how we're breaking down. See how this went from blue buying to yellow selling, and this was selling the whole time. Take it right here. At 56% profit overnight in this thing. In and out, in a 192 a contract, out at $300 a contract. These are just examples of it. Obviously, as I said, we do have losing trades. I probably should put a couple of them on here, but I just want you to see here. Again, here we go again with another setup here. A workday, blue. This is switching back and forth, which is a little bit problematic, but I took it anyway and did a 5-day trade in this thing and made 30%. MDT, enter here, yellow. The current time frame was yellow, then went blue. Current time frame was going from selling to buying. Current multi-time frame was already buying, so they had been buying for a while here, and so I take it right here, and then I get out right here, 25% profit. Vertex is another one, so you can see what we're using. We're using the multi-time frame and the current time frame momentum generally on the swing type trades, and just the current time frame momentum on the intraday trades. 30% on the VKTX here. Again, this was another nice one here. This was in McDonald's. Everything's green. You can see all the buying that's going on here. Very, very easy to see. And you get this breakout of compression right here. See the dynamic compression zone, the shaded area breaks out. I take it overnight, in at 830 a contract, out for 1130 a contract. 37% gain just on that 1 day. This is a 5-minute chart. This was an intraday trade on Amazon. Green here and green here. Notice we go yellow, green. We got all green across the board as far as the multi-time frame and current time frame momentum is concerned. So I take it right here as it breaks above the 15. Right here, the 15 EMA, I take it right here and I ride this thing up for 45 minutes and I'm out for 32% profit. Stayed above the 15 the whole way. I'm just looking for a pullback in it. I mean, looking for momentum to start to wane, and then I get out. Okay. And ENPH, a beautiful short here. Look at the compression. Look at the red. I mean, everybody's selling the heck out of this thing. Easy to see. This is a breakdown here of the 15. This is where I take it. If it compresses and breaks down off the 15 right here with a pop symbol, I take it right here. I'm in it for 1 hour and I make $20, 20% off the options, off the puts. Just bought straight puts. Verizon, 50% an hour. This was a breakdown below the VWAP. Everything was red. It's a huge amount of selling. It's very easy to see here that the institutions are selling the heck out of this thing. So you take it here, and then I wrote it down for an hour and made 50%. I actually remember this. I paid $45 a contract when I get in, and I got out for $67 a contract, $22 a contract in 1 hour. Pretty nice. And this is just another SPY Super System setup. You can see right here. It was all red. And this was Tesla. We took this an overnight trade. I do take some overnight trades off of these sometimes too. When I get, for example, in this case, I had you see I had yellow and red here on the 5-minute chart. I had a pop out of the box symbol, so I took Tesla short and I got lucky and it gapped down the next day from 120 to 112. This puts went up tremendously. Nice big trade on that one. All right, so again, that kind of covers the charts. It covers the different indicators that we use to find these. The SPY Super System is very, very critical. But these are what we're. If you're in the room or you're in the alert service, this is what you're going to see. This is if you're in the room, you'll see the SPY Super System as well. Okay. All right. So this is the offer that they've got this weekend, which is really, really nice. This is they used to have this tech service and the alert service separate. Right now, you can get them both. the text alert service in the live trading room for a 2-week trial. And after 2 weeks, it rolls over to a 3-month. 3 months, it's $5.94 a month. I'm sorry, $5.94 a quarter after the first 2-week trial. All right, you're going to get it cheaper. Of course, you can do the annual access here, which gives you again the alert service, the trading room. It gives you a private Discord chat community, and also what is called Wise Way to Trade Options. This is about 30 videos I have on all the different strategies, all the different indicators, and how to use them all. And you get all of that. Again, this is $17.94 for a year for both of the room and the text alert service. And one-time payment here. This is you get everything forever basically on this, and they're taking 50% off that $24.96. Really nice price for everything. You can be there as much as you want. The nice thing about being in the room is you can come into the room and for a few hours, or in the morning, a few hours in the afternoon, and yet now we have the SPY Super System trades you can take while we're waiting for swing trades to set up. It can really help with your profitability a lot. And this is the SPY Super System. This is the old Compass system. This is the software, right? And they get 50% off. Sale ends on Monday for a one-time payment. The annual subscription, and again, this is the software. It's all the scanners. It's all the videos that we've got. It's going to be installed by the right line. They'll take over your machine, load up software. It'll look exactly like mine. You don't have to do a thing. No tech support that you have to deal with, and you get all the tech support from then on is free. You don't have to pay for any additional tech support. You can call them if you get a problem. They'll take over your machine, fix anything that you run into. And again, if you do the annual subscription, you're going to get a month in the live trading room, and you're going to get a month of the alert service, both the alert service and the text alerts. I'm sorry, the alert service and the trading room. All right, so that's $22.47 for the year. Now, what they've done for this weekend, this is like a one-time thing. This expires Monday. If you buy an annual on the software, $19.98. It's actually cheaper than the yearly. I don't know why, but it's a pretty good deal. 50% off for a lifetime. And again, you get the same thing. You get the trading system, the software. It'll be loaded up there. It'll look exactly like mine. You get all the scanners. You get the videos on how to trade options. You also get the installation on it. And then you get 3 months in the live trading room as part of it, and 3 months of the options tech service as part of it. So this is quite an interesting deal. I've not seen this before, and that is really, really cheap for that software forever. You don't even have to subscribe again for that. So that's pretty nice. All right. So those are your offers for this weekend. Again, I appreciate everybody being here. I'll show you real quick something else. I'm going to load up the Compass system as it is right now. This is the Compass system right here. Just so you can see, here's some scanners. I've got multiple scanners. This is cascading up scan. This tells us stocks with relative strength, relative weakness, new yearly highs. I've got about 2 or 3 other scanners in here that you can switch off and use. But this basically is what it looks like now. This is a setup with the oscillator on there. And here's your current time frame momentum. If I look at the ES, for example, this is futures. If I look back and I'm looking for a long or a short of this thing, what I'm doing is I'm looking along here. All right, and I'm looking to see if I should go short or if I should go long based on the indicators. All right, so here you see how this thing went from yellow to blue right here, and you see how it's coming off to 15. There's where would be your entry, and you ride this up for 3 or 4 candles. Could have stayed in all the way here, as a matter of fact, because it didn't break below the 15. But personally, I would have been out right here. But that's what you're looking for, and that's what it's going to look like on your chart. So even if you're not in the room, if you've got the SPY Super System, you can trade this stuff yourself as long as you understand the strategy. And I have a very specific video on the strategies that you would use for this for these SPY Super Systems. All right, so that kind of wraps it up for today. I appreciate everybody being here. Appreciate your attention, and I hope some of the information we've given you will help you improve your trading. So again, thanks very much. I appreciate it. Everybody have a great weekend. Will mention, by the way, which I forgot to do, the chat box includes a link to the the offers that we've got. If you're interested in the offers, you click there in the chat box, and it's got a link directly to the this offer here for the software, and this one here for the options room and the text alert service. All right. Thank you very much. Appreciate it, everybody. I look forward to seeing some folks in the room here soon.